to welcome all of you to the Board of Governors, and then to introduce Chris Waller, who will get us started for this morning's sessions. I'll turn to the particulars of Chris's biography in a moment, but it's important to emphasize at the outset that one of his current roles, and one that's perhaps less well known outside of the Federal Reserve System, is that he actually right now chairs the Committee on Federal Reserve Bank Affairs and the Committee on Payments, Clearance, and Settlement here at the board. In short, Jay Powell has charged him to take the lead among board members, both on payments matters and overseeing the operations generally of the reserve banks. As a part of this role, he is the oversight governor for my division and my boss, among others, so the man to whom I'm directly accountable. So let me first take a moment to describe a bit about the work that we do in the Division of Reserve Bank Operations and Payment Systems, or RBOPS, as it's gently known inside the Federal Reserve, as these all relate very closely to what you will be talking about over the next couple of days. We in the Division of Reserve Bank Operations and Payment Systems, we wear many hats. We have responsibilities to oversee the policies and operations of the Federal Reserve Banks, including in their provision of financial services to depository institutions, such as the FedWire and FedNow services, and as provider of fiscal agency services to the U.S. government. We do everything from send Social Security payments to manage the federal government's checking account. We also, by the way, oversee the reserve banks in areas much less unique to central banking and unrelated to payments, things like keeping the buildings well maintained and making sure that people get paid on time. Our division, therefore, has long-running experience with monitoring all sorts of things, but especially payment systems. So it makes sense that we also have other responsibilities for the supervision and oversight of payment systems and financial market infrastructures, specifically those designated by the U.S. Financial Stability Oversight Council as systemically important. In this role, we participate in the Fed's ongoing monitoring of financial stability. Beyond financial stability, we work to promulgate policies and rules to foster the integrity and efficiency of the U.S. payment and financial systems, working closely with other regulators, foreign central banks, and many, many international organizations. We also have responsibilities relating to the design and issuance of U.S. currency, for which the Board of Governors is the issuing authority. And of course, like everyone at the Federal Reserve, we are committed that policy making depend and be driven by the highest quality research. The Federal Reserve is, as everyone in this room knows already, a research-driven policy organization. So wearing this hat, we in RBOPS conduct and support research on various topics related to payments and financial market infrastructure. It's wearing this particular hat today that I have the opportunity to welcome you this morning, and I look forward to hearing more about your research over the next 2 days. Let me now introduce Chris to open this workshop. Chris was born in Nebraska City, Nebraska, and grew up in South Dakota and Minnesota. He received a bachelor's degree in economics from Bemidji State University and his master's and doctorates in economics from Washington State University. He was a professor at Indiana University and then the University of Kentucky before moving to the University of Notre Dame, where he taught for many years and also chaired and reconceived the economics department. After Notre Dame, Chris spent 10 years as research director at the Federal Reserve Bank of St. Louis and then joined the Board of Governors in 2020. Chris is the author of myriad academic articles, a good number of which are on the type of issues that you all will be discussing over the next 2 days. Please join me in welcoming Chris Waller to the podium.
Give me a second. They don't let me talk off script anymore here. All right, this thing. There we go. All right, and I didn't wear a suit for you. So thank you, Matt. I'm delighted to welcome you all in person to the 2024 Summer Workshop on Money, Banking, Payments, and Finance, jointly organized by the Federal Reserve Board, the Bank of Canada, and the Study Center Gertsen City. I want to thank the organizers for putting together such an interesting program, and also thank the participants for their contribution. The evolving nature of money and banking creates new channels through which financial markets and institutions can affect the economy, with implications for all 5 of the Federal Reserve's functions, which are monetary policy, financial stability, supervision and regulation, payment systems, and consumers and communities. Relatedly, the emergence of new technologies can generate complex economic interactions, and theoretical research and analytical work are crucial to understanding the implications. Many of the concepts underlying such economic interactions have for years been the study of this workshop. When I was research director at the St. Louis Fed, I put together several iterations of this gathering. As the organization of the workshop has passed to a new generation of economists, I continue to find it to be a leading venue for studying the economic mechanisms through which money, financial markets, contracts, and institutions affect economic activity and economic welfare. Past participants have advanced modern money and banking theory, bringing new insights to real-world economic problems and policy analysis. Numerous research papers presented in these workshops have been published in prestigious economic journals and influenced scholarship in the area. Now, if I had to describe the work that has been presented at this conference over the last 20+ years, I would characterize it by saying it focuses on the economics of exchange and payment. Walrasian supply and demand models describe an equilibrium quantity and price, how they're determined, but it's silent on 2 key questions. How do the goods get from the seller to the buyer? And how does the payment get from the buyer to the seller? In short, standard supply and demand analysis have nothing to say about the actual exchange process and how payment is made. In a sense, exchange and payment are viewed as trivial issues. By delving into the micro foundations of exchange and payment, as people in this area have done for 20+ years, we're able to identify key frictions that make exchange and payment far from trivial. This is not just a theoretical issue that is only relevant to economists in ivory towers. Payments and exchange processes are multi-billion-dollar global businesses, and private sector firms are constantly innovating in this area to overcome the types of frictions that are well known to this group. The knowledge that I've gained from interacting with researchers in this area for the last 20 years has aided me in one of my roles as Federal Reserve Governor, supporting the Fed's oversight of the U.S. payment system. It also guides my thinking about how to make global payments cheaper and faster, which is a key objective adopted by the G20 countries in 2020 and is fully supported by the Federal Reserve. Keeping with the tradition of studying exchange and payment, several papers to be presented this year focus on frictions in financial markets, such as asymmetric information or asset illiquidity, matter for the transmission and implementation of monetary policy, as well as unemployment and inflation. Similarly, it is great to continue seeing work studying frictional intermediation in asset markets and the implications for asset prices and efficient risk sharing. These contributions push the frontier of our knowledge, facilitate our understanding of real-world complexities, and inform policy thinking. The workshop's focus on broader financial stability issues is also very important. Financial stability vulnerabilities such as run risk, excessive leverage, bubbly valuations could amplify the effect of adverse shocks, potentially resulting in big economic losses and a slowdown in economic activity. Understanding the mechanisms that allow these vulnerabilities to grow and transmit stress to the rest of the financial system requires rigorous theoretical research and solid micro foundations. Over the course of this week, we will hear interesting work on this topic that includes research questions such as how a central bank can balance interventions for financial stability and interventions to achieve a certain stance of monetary policy, how banks take risk, and understanding the risk of runs on banks, non-banks, and stablecoins. Other concepts are newer and more novel. As the monetary and financial ecosystem has evolved, so has this workshop, bringing together many perspectives and modeling approaches to money and banking theory and its applications. One recurring theme has been to pay special attention to micro-foundations and institutional details, which is important to rigorously analyze and understand today's financial innovations and evaluate implications for welfare and policy. This year's workshop continues in that innovative spirit, keeping an eye on the future of money and banking. The papers to be presented span areas including decentralized ledgers, exchanges for crypto assets, and the impact of certain protocols on financial stability. Researching these new technologies helps us deepen our understanding of the implications for the broader financial system. An important point to remember this week is that no single field of study can give us answers to all the big questions we face relating to the evolution of money and banking. Commingling of insights and techniques from monetary theory, finance theory, and other fields is vital in studying the complex interactions of modern financial systems. Of course, it is also important to test our theories with available data, and many papers we will see this work deliver on that count as well. So without further ado, let's get started. I hope you have a great week of engaging discussions, and I'm sure we'll learn a lot from this year's workshop as we have for 20 plus years. So thank you.